Commodities are moving fast, some cooling off, others heating up. Welcome to Commodities Weekly from Investing Angles, where every candle speaks, every Elliott Wave whispers the truth, and we chart the turn before the herd even blinks. This week we are watching closely. Oil, key checkpoint coming Tuesday. Can the giants hold the line or break it? Natural gas, neutral, bearish, bullish. Which frame will dominate next week? Copper, bouncing back, but is it a healthy recovery or just a pause before the plunge? Silver and gold. The candle story here can't be ignored. It might just define April. Coffee, taking a breather or gearing up for another move. Uranium, are we watching a major bottom form in real time or not so fast? We've just crossed 15,000 subscribers. A huge thank you to all of you riding the waves with us. Your support fuels every chart, every call, every analysis. Got a ticker you want us to break down next week? Drop it in the comments and we might chart it live. Smash that like, tap the bell, share with your trading crew, and let's dive straight into the charts. And today we start with oil. This is the candle closure. The daily on Friday closed with a neutral candle. On Thursday, it definitely put a cap on the big rally. And on Friday, it just hadn't decided yet what the path to take. So far, the trend remains bearish, and even if we can see a move higher, it is highly unlikely to be a strong rally. Weekly frame closed with a neutral doji, and right now it's really difficult to say which one will take precedence. So far the trends are bearish, and I would say that the bears have slightly better odds for this one. But this is the critical test that's coming on Tuesday for oil. So far oil has been building bearish odds on many frames, and this is the 15-day frame. In order to mitigate the bearish closure on this frame, oil needs to rally about 15%, 14 to 15% in the next 2 days. Is it possible? Yes, definitely. However, the probability of a rally of such degree would be somewhat on the low side. Well, now let's move on to the charts, and we will start with our big one. So this is the map of our major calls, and some people say, oh well, you're doing this just for a couple of months and you're lucky, and so on and so forth. However, we've been tracking oil for a very long time, and our major call came on June 4th 2022, when we said oil is forming a diagonal, and that oil was at the time about 120, and everyone and their smart fridge were expecting oil to go to 140, 150, 180, you name it. However, we said, well, oil is stretching a lot and it is about to go down big and for a long time. And this was our call on June 4th, just before oil hit the big top. And after that, it started to decline. Another one came on August 2022, when oil hit the level 94, something that we were expecting, and we said, here's a double top, here's the target, 65, be prepared. It's not going to be a straight line here, however, the target is there. And guess what? Oil was moving slowly but surely towards the target. This is the 65 line that oil hit in March 2023. After that was one big rally, and at the top of this rally we charted this chart that you are seeing right now. We are saying that oil is possibly to go down, maybe we'll do a rectangle, and hit 65 again and will be on track toward 34. So this chart has all original charting elements at this point, and I'd like to highlight here. So this is 65. This is the one that we placed right here, and now oil bounced a little bit and is moving lower. So the last time I updated this chart was December 2024. Now I think it's time to make a new date, April 2025. Again, I'm not updating this chart, just tracking it. Well, that's a little history about our big calls. Let's talk about small ones. So this is our midterm frame. This is what oil is doing right now. Let me update the timestamp. So this is wave 1, potentially wave 2, and oil is forming wave 3 based on its character and a few other signals. Potentially it already hit the target that we outlined a little earlier, and I would expect it to go lower. Once wave 3 is complete, we would expect wave 4, wave 5, and moving down. Speaking about the short-term chart, oil potentially formed an impulse, something that we outlined back in April 8th, just a few days ago, saying that after that oil expected to move higher. However, this wave is not clear at this point. It might go slightly lower, maybe form something like this, A, B, C here. So this would be wave B, and this would be wave C of a bigger wave. This is the potential. Right now, this is we are tracking all these paths. If oils form this one, that would be a strong consolidation before the next move lower. So far, there is very little perspective for oil to move higher. And now let's move on to the next chart. This is the closure of oil giants, ExxonMobil, Chevron, and the ConocoPhillips. So what we are seeing here is that we have bearish continuation candles on the weekly frame. This is on neck, in neck for Conoco, and just a continuation candle for Chevron. The chances for a move lower are significant for the next week and beyond for these three companies. And the last one I'd like to talk about for oil is this chart. This is the ConocoPhillips chart that we shared at the end of January, on January 29th, when Conoco was 101.56. Right now, what we can see that the company lost about 15%, and it's already hit our target area that we identified there. However, based on the candle formations and some technicals, it looks like the company is moving lower. Well, that's it for oil. Now let's move on to natural gas. This update will be rather quick, and I don't have Elliott Waves here, only the candles. There is a big battle right now, tug of war between the candles. From the daily perspective, the odds are bullish. This is a big bullish engulfing on a daily frame. It wasn't able to go higher. However, it wasn't negated either. So this green little candle on Friday is kind of neutral, and we are still painting direction here. The same thing is happening on the 3-day frame. Potentially, this is a deliberation pattern, which is a soft bullish one. However, we need to see a very strong confirmation. So this candle, which is building right now, it is closing on Tuesday. If it makes a bullish engulfing for this doji, it will be a reversal on this frame. If we look at the weekly frame, it closed with a bearish formation, technically forming a confirmation for the dark cloud cover and another dark cloud cover here. So I would expect the next week we'll start with lower prices. And if we look at the monthly frame, for example, it is bullish technically because it formed a bullish candle in March, and right now it's still holding above all major support lines, particularly 200 months moving average, which is a red line, and 100 months moving average, which is a purple line. So if this candle is not formed like this, and if natural gas pulls up, it most likely going to be a neutral candle. However, we still have 18 days. Anything could happen to natural gas, but there is a disconnect right now. Monthly is bullish until it is confirmed otherwise. Weekly is bearish, and potential for the daily and 3-day frame is neutral, leaning bullish. So I think that the next week, the beginning of next week, will be very, very important, particularly the first 2 days. If we see strong bullish moves, this is a very good chance that we might see a start of something bigger upward. And then we will share the chart and the targets. Now let's move on to the next one, and this is copper. So we made a very strong call on April 2nd when copper was $5, and we were saying that it has a good chance to drop sharply. So copper did, and it already made it through both targets. So far the drop was about 13%, but then it recovered a little bit, and right now it is 10%, about 10% after the call of the top. But the candle here is not exactly a bullish candle, so most likely it's a thrusting line, and I would say that we need to see a very strong confirmation. My perspective that this is going to be some horizontal move, range bound move, maybe slightly upward before we can see the next move lower. And speaking about the 10-day frame, which closed on Friday also, this is a very strong bearish engulfing for the 10-day for this particular frame. And I would say that there is a very good chance for the copper to move lower in the next 2 weeks. So that's something to look for. And this is our bigger chart, Elliott Wave chart, that we also shared at the beginning of April. We were saying that there were potential for 2 ending diagonals, double ending diagonal for the first one that started in December 2015 and completed here, and another one that started in July 2022, which are expanding ending diagonal. So if they are indeed, if this hypothesis confirms, then we should see copper to drop towards 3.13, or the worst case scenario 1.93. That's the chart that remains intact, and we are closely watching it. So I think that the monthly closure would be critically important in this case, and in 18 days we will know with very high probability what's happening with copper. And on a short term, this is a potential impulsive wave that we are tracking. At the same time, if this wave completes here, so far it's been a corrective wave. If it completes here, we might see wave 5, and after that maybe a bigger correction. However, at this point there is a possibility of an ABC formation. So this could be technically wave A of a bigger correction, and we would be looking for this particular formation, something like this, before the next move down, based on candles and multiple technical indicators. So this would be a possible pass. All right, so that's all for copper. Now let's talk about precious metals, and we will start our section with silver. So silver made a very strong move from candles perspective on the weekly frame last week, and this week it obviously tried to negate it. I cannot say it didn't succeed at this point. So this is a piercing line which closes above the midpoint of the red candle, and there is a possibility of a move higher. Very, very nice one. However, if we look at the smaller frame, so this is a 2-day frame which is still forming, silver has a chance to close this candle on, so it will be on Monday. This candle needs to close above the red candle in order to reverse it. Is it possible? Well, definitely. However, we shall see about the probabilities. I am not quite convinced that this is going to be a very strong move. Speaking about the daily frame, the daily technically completed at our bottom, and there is a chance of seeing higher prices early next week. However, would they be sufficient? That's a big question. So far the odds are bullish on the short term. However, they are neutral on the midterm, and we would be looking for a confirmation first. If we look at the Elliott Wave chart, so far this has been on the table for a long time, and there is no clear signal yet. So we need a clean bullish or bearish closure here in order to consider the red path or the blue one. So far, it's still 18 days to go. Speaking about the short-term frame, this is the one that we discussed in our last update. After potentially impulsive wave, if we consider the purple count, silver has been forming a corrective wave up. So the wave, the very first one, is not entirely impulsive, and the one that is building right now, well, it could be an impulse. However, there are questions about its structure. So what I was looking for is a potential ABC structure with an ending diagonal, expanding ending diagonal, closing somewhere in this rectangle. So this was the chart that I shared previously with the public. So far it is in the rectangle, and the chances for moving slightly higher next week are substantial. If we look from the perspective of an impulse and consider the very first wave as an impulsive, and wave 2, wave 3, if it goes into that level, then if it forms an impulse like this, for example wave 4, and we would be then looking for wave 5, it could be the start of the next big wave. However, I'd like to see how it completes the current wave and how it develops the next pullback. So this would be crucial for forming the next impulsive wave. That's for silver. And now SLV ETF, what we are seeing here, the same story. The daily frame technically bullish, however, the trend is not yet. The 2-day frame will be forming on Monday, and it is very close technically to confirm a bottom. All it needs just to close above this line, this candle line, and let me identify the level. It's 29.51. 29.51. So if on Monday SLV closes about 29.51, it will strongly increase bullish odds, and will have a very good chance of forming a much larger bottom and extending bullish momentum. About the weekly frame, so far this is a bullish harami, but not very well supported technically. We need to see a very strong confirmation in order to resume the rally for silver. And now let's talk about gold. Gold has been a runaway train. Technically, these could be viewed as their three white soldiers. However, I would say that there are several technical indicators that are against this pattern, and this could be just the final pattern of an ending diagonal or a very strong wave up. That's at least that's my reading of technical indicators. Let's see what candles do and how they close the next couple of days. So far, there is no signal about reversal on this frame. If we look at the Elliott waves, this is the chart that I've been tracking since the middle of November, and I already mentioned multiple times that I'm not seeing a very strong impulsive structure of this chart. First of all, it's the structure of wave 1, which is clearly corrective, wave 3, which doesn't have all impulsive qualities, and wave 4, well, technically now it is a 1-2 ABC wave. Let's see how it closes, what the next candle would be. So far, if this hypothesis materializes, we should see oil returning to the level of origin, 2541.50. And this is probably the next chart is the most concerning one in this section, in the gold and silver precious metal section. So this is GLD trust. And if we look at the candles here, what we can see here, it's very, very concerning. So we have two big bearish signals. First of all, it's three gaps. 1, 2, 3, 3 gaps in a row. And by candle standard, it's a very concerning one. So these needs to be closed, at least two of them. If they don't, well, I would expect all of them to work as a strong reversal. And this candle here is a spinning top or an evening star. And I would like to emphasize it's way above the Bollinger Bands, which is another big bearish signal for the potential. I think that next day, on Monday, we might see either a very strong drop here, which would be a confirmation, or opening even higher and making a bearish engulfing, which is also going to be a very big reversal candle. I think these two are on the table for the next move. If we look at the other frames, so technically 3-day and the weekly were strong bullish closure. However, I would like to emphasize that they were strongly overbought. That's for gold and silver. As just remember, there is a very big concern for GLD candle structure. And now let's move on to coffee. Coffee, what we are seeing here, the weekly closure was technically a hammer. However, in the bigger context, it's not a bullish candle at this point. Even if it closed for the second time below the very strong 8 EMA weekly support line, and now it's strong resistance. Another thing that to consider is this one, MACD, weekly MACD bearish cross that happened a few weeks ago, and this cross is by far the biggest one for coffee that happened over its long term. Speaking about the daily closure on Friday, it formed a bullish candle. However, it wasn't sufficient even to make to surpass the previous candle's odds, so it still needs a confirmation. And speaking about the bigger one, it's not yet a reversal. If we look at the 10-day frame, which closed recently, last week, so what happened here is we can see a strong tower top formation or confirmation of dark cloud cover with a very good chances to move lower. And this is the Elliott Wave chart that we made on March 29, saying that potentially coffee formed a very strong hinting diagonal with a spike over its upper boundary with a very good chance to move lower. So far, this wave, this chart remains intact. So coffee lost about 10% after the call, and we would be looking for a continuation to this one until we see a strong reversal or strong. So what we are seeing here is that we already discussed that uranium could be forming some sort of bottom, and the last week was pretty good on this. I would say that the daily formed a bottom. Today, if it moves a little higher on Monday, it will also form a bottom. The weekly frame formed a solid piercing line for URA, and that's it for now, but we need to see a confirmation. If we look at the monthly frame, however, it's not that bullish yet. So however, if the momentum grows and we see a confirmation on the weekly, the monthly candle might transform into a bullish one. However, it's not happened yet. Now let's move on to the next chart, which is energy fuels, Quad U. What we are seeing here is a very strong move of the bottom, and I would like to say it's much stronger than the previous one that we looked for. This is a rally already for the daily frame. The weekly closed with a strong bullish engulfing candle, and now comes the next test. This is the 10-day frame, which will be closing on Monday. So in order to build the momentum, energy fuels need to close this candle as a bullish one, and I would like to say that it needs a slightly higher price. Approximately it needs about 4% rally on Monday in order to make it a much stronger case. Well, it's gonna be challenging, I would say, but nevertheless, this is something that we will be tracking. And speaking about the 2 month candles, energy fuels is not bullish yet. And I would say that the odds are strongly bearish right now, especially after this last 2 months closure, which happened in February, and it was a very strong break below the 50 periods moving average. Now, if we have a second one here, even as a doji, it will be an even stronger one. Speaking about the charts, this is what we had for long term perspective. Right now, energy fuels is in the middle of our target, potentially hitting the middle point and forming a rally here. Whether it's gonna extend it, this is still a question, because at this point we also see the perspective of moving lower here. And speaking about the short-term chart, this is the perfectly executed bearish flag right in the middle of the target, and right now there is a possibility that energy fuels are forming an impulsive wave, but the wave is still very young and we need to see a better data. Especially the next pullback would be very critical from that perspective. And the final one I'd like to discuss today is CCJ, Chemical Corporation. Let's start with the candles. So far, it's been impressive, and potentially Chemical formed a bullish bottom here. It formed a very strong bullish engulfing on the 3-day frame, and the weekly also closed with a bullish engulfing. Even though that Chemical closed its quarterly frame with a strong bearish engulfing, there is a chance of recovering, but this is just a fresh candle, and we would need to wait for almost 3 months until the next one forms. Let's see if the corporation can extend its initial bullish odds that are pretty promising right now. And speaking about the chart, this is the bigger, change it to a different degree. So this is potential impulsive wave that we have been tracking, and that also could be a wave A of a different wave structure. So this could be wave A, wave B here, and wave C right here. So technically this would be wave A of a bigger degree, and let me change the color so it matches. So this could potentially be wave A, and let's see how CCJ develops a wave from here. If it forms an impulsive way, then we would be looking for a complete recovery and the rally higher. However, if the wave remains corrective, we would be looking for something like this. This would be potentially wave B, and then Chemical would be looking for a move lower. And this would be aligned with this chart that we shared way back in February, saying that Chemical has potential to form this type of wave on a larger perspective. So it's almost close to our target 34, and if it forms an impulsive wave, let me get back to the previous chart. If it forms an impulsive wave 1, 2, 3, 4, and 5 here, then we would be treating it as clearly as wave A of a bigger correction. Let's see how it develops in the next couple of days. And today definitely is not March 14, it's April 12. All right, so this is the perspective for CCG. We discussed already candles, and technically this wraps up our discussion. So from oil's next move to uranium's quiet build up, this week in commodities is all about setups with serious potential. Silver and gold candles told the story too bold to ignore. Did you catch the signals? Natural gas remains in a tug of war. Coffee might be resting, but don't count it out. And copper, well, it better prove this bounce is real. If you're done guessing and want to trade with structure, precision, and the statistical edge, join us at investingangles.com. Full Elliott waves, candle reads, and data-backed targets all in one place. Thanks again to our amazing 15,000 subscribers. Your engagement drives everything we do. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.